Good day, ladies and gentlemen. Welcome to the show. Glad to have you guys here on this 17th of April, 2025, a Thursday. Thank you for tuning in. What we're going to do is do a little bit of a deep dive into silver right now, and we're going to take a look at a dynamic that's probably going to happen in the next year. Why? Because we are going into a global recession. Headfirst into a global recession really, really fast right now. And so we're going to take a look at this dynamic. I'm going to try to explain it in the next, say, 10 minutes. But it's very complicated. It's hard to understand. The first thing we're going to have to do here is we're going to have to take a look at the silver supplies and stuff from the Silver Institute. And what we see here is a chart going back to 2015, a total supply of silver from mining production right here and from recycling. And so what we're looking at is we only have data up to 2024, but in 2024, silver mining production was 823 million ounces. And the total supply from mining and recycling in 2024 was roughly a billion ounces, I guess, a billion ounces, 1,000,000,003 ounces. So close to 1,000,000,000 ounces. Now, if we go down here to this chart, we can see the total demand on that supply of 1,219,000,000 ounces. So they went into deficit for 200 million ounces in 2024. Okay? A 7% deficit. So that's where we stand right now at this particular moment in time. What happens is, and what I want to point out is this is where 80% of the silver comes from. These are large open pit mines for copper, tin, zinc, lead, and nickel. That's where they get 80% of the silver. So silver is not the thing they're mining for. What they're mostly mining for is copper, and they get 80% of the world's silver. Now, there's 20% of the world's silver that comes from what's called primary silver mines, which is mines where they are mining for silver. It's not a byproduct. But 80% of the silver comes from these mines where silver is a byproduct. Now, these other metals, copper, tin, zinc, lead, stuff like that, are consumed for whenever they build you a new house. You want a new house built, okay? It's most likely going to have copper wiring all through the house everywhere. This is what puts demand on copper. Primarily is mankind's industry of building things and using up copper to make motors to run factories and stuff like that. Okay, so you get a recession / depression. What happens? Well, demand falls. Well, demand will fall for silver as well, but it's also going to fall even harder for these other metals that are used in things like construction when you get a depression / recession in the world. And so what happens is they have to scale back because prices drop on things like copper. Okay? But the cost for the mining companies is going up right now because all the prices for everything is going up. It's inflating. We got inflation. So they have to get more for their copper. But instead, because there's a global recession, because that's going to be one of the things that are heavily impacted, is these metals that are used in things like construction, they're going to see a significant drop in mining production. That means we're going to see a significant drop in silver mining production. Now, at the same time that that's happening, looking at silver supply and demand, we probably see this demand drop on silver. Now, I'm thinking myself, this last year in 2024, the demand was 710 for industry, 710 million ounces. We could very well see in a global recession that demand drop down probably into around the 550 million ounce range. So dropping from 710 probably down to about 550. If we go back to the global recession, we see the droppage here. During certain particular years, it can drop down to 500 million ounces a year demand. But the demand for these other metals, like copper and stuff, might get really, really smashed, just like they were worried that the demand for oil would be completely smashed during the beginning of COVID. We saw negative pricing on oil. In fact, it went to a negative $40 a barrel. So how does all this pan out? Well, I think industrial demand for these metals like copper, zinc, tin, lead, I think the demand's going to drop on them much harder than the demand for silver's going to drop. But at the same time, we got another thing happening, is this net physical investment. What you're going to see is this is probably going to continue to rise, especially during times of turmoil. People buy silver to put away for themselves. And so last year, this investment demand has been riding over 200 million ounces a year and creating this deficit. It's the biggest part. That and jewelry is the two biggest factors that have been creating this deficit every year of silver. By the way, if this deficit continues, they're definitely going to run out of silver. Because they're not producing as much as they're using by 200 million ounces a year. So we're very likely to see that the silver production by these mines that produce 80% of the silver, the mines that mine for things like copper, we're very likely to see enough of a drop in their production of silver as a byproduct to more than account for the drop in silver demand during the global depression. In other words, increasing the deficit. And also, I'm expecting that this net physical investment of silver and jewelry is probably going to grow higher. We're probably going to be seeing a number more like this number here that we had back in what year? 2022, where they used net physical investment was 337. So where does all that leave us? It leaves us in an even bigger deficit than we have right now, because the production numbers are probably going to drop off significantly. It could be as far down as we're only producing a total of 500 million ounces a year. It could drop that far in a global depression, because these base metals, these things like copper and zinc and tin and stuff, are not being used. Prices drop significantly, mines close even, or close parts of their mine, and they're not getting the silver that's coming in, that 80% of the silver. Got to think about that for a minute. That could have a profound effect upon the price of silver, especially if investment demand increases, because that's the fly in the ointment and for the ones who are supplying silver to the world. You know, I mean, because that's what's been causing this deficit every year. And so getting back to the story here, the silver price today is at 32.09. It's languishing, and I expect it to continue to languish alongside gold. Gold's taken off. It's on taken off its rocket ship to the moon. I expect that to continue. I think that the gold to silver ratio could go as high as 140 to 1 on gold's meteoric rise, when gold gets up around $5,000 an ounce. Silver price would probably still be in the 30 some odd range, maybe 36, 37, kind of like lagging way behind. Then at that point in time, we're knees deep in the global depression or slash recession. They hate to use the word depression anymore, but when we're talking about a deleveraging event of this magnitude that's ongoing right now, we're talking depression. Ever since the Great Depression, they hate to use that word. Uh, and so it's going to be significant, the drop off that we're going to see in the silver byproduct of the miners of these copper mines and stuff. I'm expecting a significant decrease in the totals. Instead of like over a billion ounces a year, I'm expecting it to drop down. It could get cut in half, for crying out loud, you know? And are they going to quit making solar panels, though? You know? When are they going to quit making cell phones? They all got silver inside them. I don't think they're going to quit. They're just going to jack the prices, higher prices, onto the consumer on stuff like that. Yeah, this is where your silver really comes from. Is from these big open pit mines that are hauling out things like copper and stuff like that. And there's considerable amounts of. You ever been near one, guys? We got a big one right here, nearby where I'm at. It's only about 10 miles from me right here, and it's a huge one. It's as big as any of these here, and it was used to mine gypsum. And I swear it's got to be 1,000 feet deep. And there's a place where you can stand by a fence and look at the mine. I haven't been there in years. Look, and it's a huge open pit mine. Man, they're impressive. One of the questions I have is why don't they fill up with water? They must pump it out. They must. Must be a lot. It must even acting as a catch basin. It would catch billions of gallons. I would, even if you get a big rain or whatever, I would think that there would be probably 10 feet of water in the bottom of the mine. Make a lake down there. I don't know how they get rid of that water. They must pump it out. But it must be a catch for groundwater in the area too. I mean, if you live next door to one of these big open pit mines, I imagine your wells wouldn't work. A standard ordinary well wouldn't work. You'd have to have your water trucked in or something because the water's going to leach through the ground back into that mine and go down like 1,000 feet into the ground, and then they pump it out. That ain't going to work for people live nearby the thing. You know, just talking. Thank you guys for listening to the show, and you guys have a great day. Bye bye.